Back to Fast Money, a big slate of earnings on deck next week. Transports, tech, staples, retail, you name it, it's covered. And the options pits are lighting up ahead of some of these key reports. Mike Khouw's got all the action and also delivering a trade on one of these names. That's a hint. Mike?
Yeah, so we're taking a look at three names, all three of which are in our portfolio, actually. Micron Technology, the first one, that one is implying a move of about 5% higher or lower after they report earnings. Nike moving probably a little bit more, options market implying a move of about 5.7%. And FedEx has an implied move of about 4.8%. That's the one we're actually going to take a look at. The good news is this is a company that has really been aggressively trying to cut costs with their Drive program, which covers a number of key operational areas. And then after 2024, Network 2.0 is probably another $2 billion in potential savings if they do that. The bad news is, of course, you can't cut your way to growth, and the top line really hasn't been growing that much. What's interesting here is that in the month following earnings, this company has moved on average about 8%, but we can actually spend just 4% to buy an upside call spread that goes out even further than that. I was looking at the February 280, 320 call spread. That one's going to cost just a little bit over $14, and that's actually slightly in the money. So you're looking at basically an upside break even of just 4% to see profits on that trade. And of course, you are mitigating your risk to the downside if the results are disappointing. And anybody who saw how this company did in late 2022 around the September earnings knows just how painful that can be because it had a big drop at that time.
Yeah. How are we feeling about FedEx and UPS? UPS, as I understand it, giving rebates to a lot of customers, so there could be some pricing pressure. I want to see if FedEx can remain firm on that.
Well, that's really what it is, because a year ago at this time, they had not only they had pricing power and they were pushing through price increases. I think, if we look at Ground and we look at some of the integration of those businesses, FedEx right now, the trends are good. And if you think about where this company was also 4 or 5 quarters back, this was clearly a prove me story. Stocks rallied about 30% since that market turn. I think these numbers are going to be solid. I actually think industrials like this continue to go higher.
Also, if FedEx didn't have the UPS union costs that they had, and if it's outperformed, it's up 62% year to date, while UPS is down roughly 6%. And with gas coming in, that's another tailwind. So I agree with Tim. You don't want the cost cutting to be the main thing of the fundamentals, but that is definitely a tailwind right now.
Industrials overall, though, have had pretty big rally since October lows or so, to your point about the value trade really coming back. I mean, we've seen a 16% gain on the industrials ETF. FedEx, of course, one of them that have gained. UPS also, I mean, it really fell off a cliff in October, gained it back.
Yeah.
In the meantime.
Yeah, and I agree. I think we're going to really see these things turn back around. I think you're just starting to see that. So I don't think you've missed the rally here. I do think you probably should have been investing these things as they came back around, because like always, that comes in before the news. You're going to see a lot of that price action already happen, and it has. But I don't think we're at the end of that. And I do think you want to make sure you have that position in your portfolio, because I think that's likely going to be the story, not only the end of this year, but as we go into 2024.
UPS or FedEx, Bonawyn?
Right now, I think UPS, actually. I've been looking at that relative value trade, and typically that spread is about 2 to 3 times in terms of price to earnings over the course of history, or recent history, I should say. At 15.5 and 16.5 times, respectively, that's narrowed to 1. It has traded even, but I think you're getting to a point where maybe UPS starts to be where you should be parking that money.
Well, this is one of those great pairs. And again, we talk about Target, Walmart, we talk about UPS, Coke, Pepsi sometimes. But, I mean, in this case, you've actually seen FedEx outperform UPS by over 65% year to date. And it made sense. And not only was UPS trading at a premium, as it always does, but 2 turns above where it normally does, which is usually about 4 turns above FedEx. But, again, this outperformance by FedEx is extraordinary, maybe on a relative value, even though it's more expensive. But back to relative terms, yeah, makes sense.